What £1.9 billion Redbird war chest could mean for Liverpool. The partners in Liverpool owners Fenway Sports Group are planning further growth. For Redbird Capital Partners, it has been a busy year. The private equity firm, who took an 11% stake in Liverpool owners Fenway Sports Group at the end of March for a $750 million, £542 million. Some have been acquiring sports properties over the past 12 months or so, having purchased a controlling stake in French second division side Toulouse last summer. Redbird, led by founder and managing partner Gerry Cardinale, have since taken a slice of FSG. A move that some see as paving the way for them to increase their stake and have a greater say in the direction FSG takes in the coming years. They have also linked up with Hollywood actor Dwayne Johnson and his ex-wife Dani Garcia to try and raise the idea of the off-season alternative to the NFL, the XFL, with a 2022 date slated for that to get off the ground. In addition, they have taken a 15% stake in the Indian Premier League cricket team Rajasthan Royals. With the IPL outfit's entire operation valued at around £200 million and sitting in a market that is expected to see its broadcast rights income surge in the coming years. Up until August, Redbird had been a front-runner to be the new owners at Spanish second division side Malaga. The 2013 Champions League quarter-finalists have been under the guidance of a judicial administrator since last year as the authorities seek to resolve an ownership group between two parties. Sheikh Abdullah Al Thani and the Blue Bay Hotel Group. Redbird had taken a very small stake in order to be part of a proposed capital increase. Something that was a prerequisite set by the judicial administrators for those interested in taking part. The talks broke off late last month after reports in Spain stated that Redbird and Malaga have suffered a breakdown in communication. And the Spanish side were looking towards their second choice. Spanish media outlet Malaga Hoy stated that Redbird Capital required that the loan from the credit policy, €8.6 million, be repaid in club shares without going through the necessary capital increase. Something that was refused outright by the club's judicial administrator. Redbird have made no secret of the desire to have a multi-club model like City Football Group and Red Bull. And they have now turned their attention elsewhere as they seek to invest in other sports and media businesses. With the private equity firm looking at more football clubs in Europe, having looked at more than 80 before landing on Toulouse last summer. And they certainly have the funds to invest after their latest investment fund success, which raised $2.6 billion, £1.9 billion, is anything to go by. According to business website Buyout Insider, the Redbird Series 2019 closed in March and raised $1.4 billion and a further $1.2 billion in co-investment sidecars, where second investors invest capital on the behalf of others. The funds raised underpinned their investment into the likes of FSG. With Redbird also investing in other businesses and industries during the past 12 months. Including the marketing and talent agency Wasserman Media, which looks after a host of top sports stars, including representing Liverpool defender Joe Gomez and reported target Houssem Aouar, of League One side Lyon. We're not a vanity investor in sports, Klein, who explained that the strength of relationship between Cardinale John W. Henry and Liverpool chairman Tom Werner drove the FSG investment, told Buyouts. We have a long history of seeing things in sport that others don't. Redbird, according to Klein, differ from some private equity firms in that they present themselves as a business builder to solve problems as opposed to one there to provide credit and liquidity. That certainly chimes with the messages coming from FSG in the wake of the investment. With the Redbird deal sought and struck in order to allow FSG to continue to push ahead. With plans to add more parts to the business to drive growth and revenue in the face of the pandemic. Effectively trying to operate as if it was a year that hadn't been so significantly affected by the worst healthcare crisis in a century. More of the same is likely to be what comes next, and Redbird given the declaration that they want to continue to add European football clubs to their portfolio, will be eyeing the next move. Klein told Buyouts that Redbird will return with another offering next year. Seeking to try and secure a similar amount as was brought in at the close of their last $2.6 billion. That is something that will aid the next chapter of the growth plans and could well be the catalyst for adding more clubs. For Liverpool, a successful acquisition of more European clubs could have been potentially beneficial further down the line. with FSG having stated their intention from the outset of the Redbird and FSG deal back in March that there could be a simpatico relationship to be had when growing their sporting portfolio. FSG have mulled over options to purchase other European football clubs in a bid to try and replicate what the City Football Group have done with Manchester City. But by having Redbird already very much invested in their own course in that respect, there are potential benefits that Liverpool could reap through having partnerships with Redbird-owned clubs. New rules around Brexit and player transfers have made it more difficult to snag top European talent. With players over 18 having to meet a strict governing body endorsement (GBE) points quota in order to sign from overseas. The points take into account strength of competition they are arriving from. How many games played and what their international recognition has been, among other criteria. Signing players under the age of 18 from the European Union is now off limits when before it was allowed. Players such as academy stars Mateusz Musilowski, Melkamu Frauendorf and Billy Cometio would all have been prohibited to sign had the deals not been finalized before the implementation of the new rules at the start of 2021.